introduction of accounting. Accounting is the system of recording financial transactions with both numbers and text in the form of financial statement. It provides an essential tool for billing customers, keeping track of asset and liability, determining profitability, and tracking the flow of cash. The system is largely self-regulated and designed for the users of financial information who are referred to as stakeholders. In other words, financial accounting is used for reporting financial transactions to the stakeholder in a format that is acceptable and editable by all businesses.
Next, move to 5.0. It's account preparation. This is our journal, our ledger, and this is the trial balance.
Okay, next I will be presenting the trading account for our company, which provides a comprehensive overview of our sales, cost, and profitability. Let's begin with the sales section. Our total sales amount to 40,000. However, we need to account for sales return which amount to 3,000, resulting in a net sales figure of 37,000. Moving on to the cost of goods sold section, we start with opening stock of 0. We then add our purchase totaling 42,000 but deduct purchase return of 2,000. This gives us a cost of goods sold of 40,000. Consequently, our gross profit is calculated as the difference between total sales and cost of goods sold amounting to 40,000. Now, let's consider other income and expenses. We add interest income of 4,000, resulting in a subtotal of 44,000. However, we subtract salary expenses of 5,000 and the final figure reveals net loss of 4,000. In summary, our trading account indexes a net loss of 4,000 after factoring in all relevant sales, costs, and income components.
So, this is Lover's Sendirian Berhad balance sheet as at 31 October 2020. In this column, we have fixed assets, which are furniture account is 15,000. Then we have current assets, which are debtors account is 10,000. Cash account is 65,000. Sanitary account is 1,000. The total for a current asset is 76,000. Next, we have less current liabilities, which are creditors account 6,000, loan account 12,000. So the total is 80,000. To get working capital, we must plus fixed asset 15,000 and current asset 76,000 minus current liabilities 80,000. So the total is 58,000. After plus 50,000 and 58,000, the total for working capital is 73,000. And last, we have finance by capital balance October 1 loan is 80,000. At net loss is 4,000 plus less drawing 3,000 is 7,000. To get the balance for balance sheet, we must minus 80,000 with 7,000. So the answer is 73,000, same with the working capital. So this Lover's Sendirian Berhad balance sheet is balanced.
The balance sheet statement. So the first point is the balance sheet is a crucial financial statement that provides a snapshot of a company financial position at a specific point in time. So it shows the company asset, liabilities, and equity, helping stakeholders assess its overall financial health and solvency. So for the second point is balance sheets provide the basis for computing rates of return for investor and evaluating and governing capital structure. So in short, the balance sheet is a financial statement that provide a snapshot of what a company owns and owes. So another uses is the balance sheets also provide information on company resources such as asset and it source of capital, equity and liabilities.
Next is the usefulness of the balance sheet statement. The balance sheet is a crucial financial statement that provides a snapshot of the company financial position at a specific point in time. Its usefulness lies in several key aspects, which is financial position assessment. It shows the company's assets, liabilities, equity, helping stakeholders assess its overall financial health and solvency. In liquidity analysis, the balance sheet highlights the company's current and non-current assets, allowing analysis of liquidity and the ability to meet short-term and long-term obligations. It also provides the basic for computing rates of return for investors and evaluation a company's capital structure. In short, the balance sheet is a financial statement that provides a snapshot of our company's owns and owes, as well as the amount invested by shareholders. Balance sheets can be used with other important financial statements to conduct fundamental analysis and calculated financial ratios. The balance sheet provides information on a company's resource asset and its source of capital, equity, and liabilities debt. This information helps an analyst assess a company's ability to pay for its near-term operating needs, meet future debt obligations, and make distributions to owners. The basic equation underlying the balance sheet is asset equals liabilities plus equity. Analysts should be aware that different types of asset and liabilities may be measured differently. For example, some items are measured at historical cost or at variations thereof, and others at fair value. A balance sheet needs important things like asset, liabilities, and equity. So based on the case study 1, we can know that fixed assets are capital, while current assets are stock, debitor, cash, and acquired revenue. For your information, to get working capital is current asset, current liabilities, and we can see the current liabilities is creditors. Next, regarding owner equity, 3 things are required, which are capital, net profit, and drawing. Finally, the owner's equity formula is capital plus net profit minus drawing. In summary, the balance sheet is a fundamental tool for understanding a company's financial position, making it invaluable for investors, creditors, management, and other stakeholders in their decision-making process.
In conclusion, this journal account report provides a comprehensive overview of financial transactions, offering insight into the organization's fiscal health. Through various financial statements and reports, accounting facilitates transparency and accountability, contributing to the overall financial health for continued success and stability. Why account report very important? This is because with the account report, we can keep our accounting record neat and up to date. Of more intricate and dynamic industrial employer, accounting should be managed with ease in normal routine industrial employee daily jobs, as controlling the industrial employer. In industry employer, accounting might contribute to the development of the industrial employer potential. With a good and accurate account record can give a good improvement of the business. To get a report, we start by recording the business transactions that are taken from a few source documents. Then, the business transaction will be qualified and recorded in the journals, ledgers, and trial balance. There are 5 categories of accounts that will involve in accounting transactions, which are asset, liabilities, owner's equity, expense, and revenue. The company can use the basic accounting equation despite there being a lot of business transactions. There will be an increase and or decrease in asset, owner's equity, or liabilities because the basis double entry bookkeeping system will have a double effect on the accounting equation. Then, all the information that the company gathered in the account equation will be posted in the journal. What is journal? Journals are the place where all the business transactions will be recorded chronologically, and each of the journal has a short description. After that, the company has to do ledgers. What is ledgers? Ledgers are combined with several similar accounts. Ledgers are important because all the balance from each of the ledgers will be used in the trial balance. For example, the company does a ledger about cash account where all the similar accounts with cash account will be gathered in a ledger. At the end of the month, company prepared a trial balance that contains all the account in ledger. The purpose that the company preparing a trial balance is to check whether the transaction have been recorded correctly in the book of account. If there is an error, the company must be adjust the trial balance. In the end, the sum in the debit must be equal to the sum of the credit is the trial balance.